US share markets made gains on Friday, although in general it was another disappointing week for shares. The US economy continues to look shaky, with their second quarter economic growth being revised lower to 1.6%. Initial estimates were for 2.4% growth, so this is a sizable adjustment and is a reflection of the change in short-term dynamics for the US economy. Shares did make some gains on Friday after the US Fed chairman commented that they will do whatever they can to support the US economy in these changing times. The New Zealand dollar has been trading in a very tight range against the US dollar over the past 7 days. Barring a couple of stints, the Kiwi has traded between 70 and 70.8 against the US over the past week. Following a slightly more positive speech from the US Fed chairman late last week, we have made some marginal gains over the weekend. We start Monday morning trading just over 71 cents against the US. We've also made some marginal gains against both the euro and against the pound, but in general, over the past few weeks, we have seen very little movement. On Monday morning, we are trading at 55.7 against the euro and 45.7 against the pound. US pork prices are on the rise again. Estimates suggest that the tight supply conditions is meaning that hog producers in the US are enjoying their best profit margins for the past 10 years. This is also having a good flow-on effect for the US beef industry. US cattle futures are up 13% this year alone, and imported beef prices are also looking very strong. Estimates suggest that more young cattle have been put onto feedlots recently in response to the very tight supply conditions. Cattle numbers in the US are down, and we estimate that this will remain this way over the coming 12 months. This should be positive for the New Zealand beef industry and should also underpin local schedule prices.